So the Federal Reserve is back to printing money after we just spent so much time getting money out of the system. They're now putting money right back into the system, and it's caused a huge boom into equities. And it seems like risk is back on. So we want to cover this because we see Bitcoin running up, we see stocks running up a lot, and everybody is expecting stocks to go down. So it's like, what is going on? We want to get to the bottom of it today. So Newski, let's get right into it, bro.
Yeah, so let's talk about why the Fed is actually doing what it's doing, right? The first thing we want to share with you guys is this article that we found, and everything that we share will be in the description below. But let's really talk about it, right? So yes, we just saw a lot of banks, and I'm talking like the biggest banks in the country and the world, struggling. And because of them struggling, the Fed had to step in and basically kind of build them out, right? Like Silicon Valley Bank is an example. Signature Bank is another example. Then you even saw Credit Suisse, which then got bought out by UBS. So a lot of these banks were struggling, and the Fed had to come in and say, yo, we will let you borrow money, right? Because we have to allow you to have enough money in the bank to survive. And since then they started borrowing money, they were like, yo, we're gonna print that money. They had to come out of, somewhere. And it can't just come from other people. So they have to print it. And that it led to quantitative easing. If you guys remember, we're supposed to be doing quantitative tightening. That's why the whole Fed has been increasing interest rates to bring down inflation. But it's been working kind of, but now with this happening, bro, it's not looking like it's gonna work. It kind of just shows that Fed might not be too serious about inflation, or they understand that we're in for a lot of trouble, so they have no choice. Like, what do you think about this?
Yeah, I mean, so it's definitely, some people see this QE or quantitative easing, but the Fed, their justification is it's not exactly quantitative easing, even though it's very similar, because they say, hey, when they pay us back based on the we're giving them, that's going to bring money right back out of the system. So that's kind of their way of saying, like, yeah, for now it's quantitative easing because we're putting money in, but once the banks pay their money back to us, then it kind of works itself back out. That's kind of their thing. And this program is called BTFP, the Bank Term Funding Program. That's what they're doing right now to make sure that, like we said, banks can stay above water. And I think it's necessary because you have to kind of weigh your options. It's either they do this or these banks go under, which will put us into a much bigger issue. We can't have the banks go under. The banks are literally the bloodline of the entire country, to be honest. So we had to do this to survive. And yeah, we're going to have potential inflationary effects in the meanwhile. But I think if they're looking at which one they want to battle, they had to do this, bro. I can't lie.
No, I hear you. It's like the picking basically the lesser of the two evils, right? That's the saying. So I understand what they're doing. However, I do want to be pretty much on record saying that this will impact inflation. And when you see the market not understanding which way to go because inflation's high, all of a sudden when it was going down and now we're going to have to increase interest rates or not, that's going to cause panic in the market eventually. And that might come down, right? And that's the biggest thing that everyone's talking about. But for right now, what we're seeing is the market, and I'm not just talking about the stock market, we're talking about the stock and crypto market. It's been rallying a lot. So if you look up this article right here, we actually saw the NASDAQ entering a bull market, right? So NASDAQ, as we know, is related to tech stocks. And since they're in the bull market, we decided to even go deeper into it. Let's just talk about this, right? Big tech stocks gained $2 trillion. $2 trillion with a T, bro. That's a lot of money. And if you just keep on scrolling over here, just look at it, right? These are the top companies within the whole tech sector. So just look at it right here, 2023, 25% increase, 18%, 14%. You see as high as 87%. And I know we're going to talk about NVIDIA for sure. So, Rel, I'm going to let you take over. But these numbers are nothing to just be like, oh, cool, a small little gain. You're seeing 48% on Salesforce. Last year, they were down 47%. And this is just the first 3 months of the year so far. So think about that and put that into perspective that we're seeing a huge run up. And sometimes it's the saying right now that stock market actually moves before the economy, right? Like it's like a leading indicator essentially. So that's something to consider. Like, are we really entering a bull market? But Ralph, I know you want to talk about something right here. So I'm gonna let you do your thing.
Yeah, so we told you guys on a previous video when we were going over the future technologies. So this is a time period where we made this video where stocks were severely depressed, right? Nobody wanted to invest. I don't know why, because everything was discount, but everybody was scared of the market. They're like, yo, how much lower can we go? And we're
But we
like,
tried to tell them.
we try to tell them, we're like, yo, listen, if you want to know what the next big thing is, think about the next big technologies in the future. What will impact the future the most? And names that kept coming up as we did our research, Microsoft and NVIDIA. And you can see there, for example, NVIDIA right now, it says, and I quote, the chip maker has seen its market value almost double through the first 3 months of 2023, as it's viewed as a play on AI. If you follow Bagtalk, that should not be a surprise to you. We told you guys NVIDIA is a play on AI.
Bro, why only did we tell them? There's a whole video. There's like 3 different videos where we broke down top stocks to be investing in, the top things to be investing in at the start of this year.
Yeah, for real. We that said this, and then you can see Microsoft as well. It says Microsoft is next with $327 billion in market cap gains as it benefited from what? Artificial intelligence buzz through its investment in ChatGPT. Like, they gained $327 billion in market cap. Like, because of this whole AI thing that they're diving into, and we told y'all about this. So Microsoft and NVIDIA definitely still high on them going forward because they really just getting started. But it kind of shows you like what will happen once we come out of this time period. And so even like speaking on that, it's just like, is this the official bull market? Yeah,
like, that's my thing. For me, I don't know if it's a bull market necessarily, but I will say, rather than thinking about bull market, bear market, I would just say, literally just think about the biggest move in 2023. Like, if you guys follow other podcasts, if you guys are looking into different news, one thing that's very, very clear, ChatGPT has taken over this year, right? That's not up for debate. And if you think about it, it's all AI related. We see people like Elon Musk coming out and saying we might have to stop using AI because it's going to take away too many jobs. So that's how powerful AI is. And it cannot develop without NVIDIA. Like, you're going to need it, right? So that's one of the biggest pieces. So rather than thinking bull, bear, what's going on, bro, do not be scared of buying these companies. Like, you guys will literally see this video probably 5 years from now when Rel and I are doing what we are continue doing right now, and nothing will change besides the fact that we will become very, very wealthy by doing exactly what we're telling you right now, which is investing in these companies. When people don't want to invest, that's when you should invest. So that's all I have to say when it comes to bear and bull market. Y'all don't have to think about that. Just invest in the best companies. Like, even Tesla, you guys are scared of investing in Tesla. Look at what it's saying, racking up $229 billion in market cap gains as stock heads for the best quarter since 2020. Like, you can't be scared of these companies.
Bro, how about Meta? Everybody thought Meta was done. Remember that whole debate? Everybody's like, yo, Meta's done. And
Meta's gonna be big.
Meta's been killing, It says it's notching $191 billion in market cap gains as investors continue to cheer the social media company's ongoing cost cuts. So one thing that everybody didn't like that Meta did was they were spending way too much money on this metaverse venture, and they pretty much scaled back and made adjustments. And once they made those adjustments, everybody bought back in. Investors went right back into them. They doubled, basically tripled in price. Meta has gone insane since their lows. And so that kind of shows you like literally where money will be once we come out of this time period. And now my opinion on whether or not we're actually in my opinion on whether or not we're actually in a bear market still, I think that we're gonna range. So I think that like we're gonna have rallies like we're going through right now, and then we're gonna come back down and basically be somewhat flat for the year. Because there's some things like now that I could see setting the market bullish. Like, for example, QE setting the market bullish. They might have to cut rates. But one thing we also know is a lot of times after the Fed pivots, which means when they start cutting rates, after that happens, a lot of times the market bottoms after that. So so if they do cut rates, there's a high chance actually that the market will bottom later this year if they cut rates in June as everyone's expecting.
I'm trying to remember. I think because when we made the video on that, don't quote me on it, but the chances of that happening are around 63%, if I remember. That usually after the the Fed cuts the rate, I think it's around 63% of the time that the market bottoms out. So I think that's the number.
Yeah, exactly. And you could like kind of look at it, guys. Like, think about it. If the Fed is cutting, especially early, like we're expecting now, that means something broke. So if something broke, that kind of shows you there's a lot of problems in the economy. So that's why the market will actually fall after, even though the Fed cut rates, which is what we're all anticipating. It's like, yeah, they're cutting rates because something is going very bad. So there's something that's potentially brewing up right now. Some things are slow. Like, for example, we brought up commercial real estate on this show a few episodes ago, how that's the next bubble to pop. But that actually takes a while to build out. A lot of real estate things have a lag to it. So a lot of things are related to real estate. So commercial real estate is not going to all hit you at once. That's a gradual death. So certain things will build out over time. Even we talked about the thing with the Fed right now, how they have to give out money right now. Like Newski said earlier, that's kicking the can down the road. That's not going to show itself until maybe next year sometime. So there's a lot of things that's going to hurt us going forward. Right now, we could rally, but we're going to end up most likely having to come back down to size. That's why I say we might rally, come down, and just end up somewhere in the middle.
And another thing, guys, like to kind of go back to this whole stock part and understand the whole up and down part. So when you guys are thinking about these companies, I think a huge point to make is because you're bringing up real estate, you're bringing up the whole banking crisis. So some bubble has to pop, right? A lot of people are talking about China right now. A lot of people are talking about the US dollar right now. We just made a whole video on that and what that really means. Forget about what that really means in the sense of, is the US dollar going to stay or not? At the end of the day, companies will still exist. And you want to invest in companies that have a great overseas market, right? They're all over the actual world. They're just not in the United States. So these companies, like I'm pretty sure Microsoft, Nvidia, Google, they still exist everywhere across the world. So that's just the point I wanted to make. Another thing to talk about, guys, is if you look into, obviously we can look into individual companies like Nvidia, as we said, up 16% in the last month, Microsoft up 11%, Amazon up 10%. This is the crazy part. Bitcoin up 27% in the last month. We see the Bitcoin market rallying, the crypto market rallying. So it's not just stocks, which I'm going to talk about, right? It's other things that we're saying that are still rallying because what the Fed is doing.
Yeah. Everything is reacting to the Fed. And I think that's like a very important point to be made on this episode here, is for you guys to know that everything reacts to the Fed, including real estate. Think about it. When the Fed started cutting interest rates, real estate picked up. Actually, if you guys look at the numbers, as soon as the Fed they didn't cut interest rates yet, excuse me, but they're anticipated to cut interest rates.
They might.
Yeah, they might. Everyone's anticipating that they will. So as rates drop, real estate picks up. Same thing in the stock market. They're anticipated to cut rates. They're doing quantitative easing again. So based on the Fed's actions, the stock market has been rallying. This happens in everything. The Fed literally controls everything. So if you follow the Fed and you understand the stuff that we talk to you guys about on a weekly basis, it will give you some direction on how to act when it comes to your investments. So you need to pay close attention and definitely study up, and we got you. That's what we're here for.
That's a fact. Honestly, that's a fact. But let us know what your thoughts are, right? Do you think that quantitative easing will actually continue to go? Do you really think that the Fed will continue to just do what they do with interest rates? You think inflation will go up? We want to know your thoughts, so make sure you comment below what your opinion is on what's going to happen. But if you're still watching, thank you. We appreciate you. Please make sure you like, comment, and subscribe to the channel. Plus, hit that little notification bell because we drop
2 videos a week,
and you don't want to miss them. We had a fire episode that dropped on Monday covering exactly what's happening with the US dollar and China. So make sure you watch it. But we will catch you on Monday. Until then, peace.
Peace.
Soundstripe.